Macquarie Private Wealth will be here to take your questions on North American large caps. To reach us with your questions, please call us toll free at 1-877-667-6288. If you're in Toronto, the number is 416-957-8199. You can also email us at marketcall@bnn.ca. Welcome back to the program, Stephen.
Thank you for having me.
Good to see you again. So the big news over the weekend and then bleeding through to today was the Chinese government, or the People's Bank of China, rather, saying that they would go for a little bit of flexibility in the Chinese currency, which is what the Americans have been pushing them to do. And, of course, the timing of this is interesting because we've got the G20 coming up this weekend, so they'll be face-to-face here in Toronto. But some rally on the markets today. What does this tell you?
Well, I think this tells me, number one, that the economies are still not where they need to be because they're excited about this news. And, whenever you have a downward trend, you tend to get these spikes up. However, I think this may be an opportunity for China to slow its economy a little bit and give the other economies in the world a little bit of help, because at the end of the day, they can manufacture a lot of goods, but if there are no economies left to buy them, then the world is not a happy place for anybody. So I think this flexibility is not complete capitulation to 100% floating currency.
It would be, if and when it actually happens, it would be gradual.
It would be gradual.
So what about the impact on Canada of this? What do you think?
You see, I think us being primarily an exporter of resources, on that side, I don't think it's that significant. Where I think it may help is slightly in the Great Ontario, where we are having this G8 and G20, where our exporting sectors have really been beaten up over the last few years. So this might give an opportunity to bring a little bit of competitive opportunities back to North America.
Bring some pressure off the Canadian currency, you mean?
Well,
potentially?
Well,
that's what the Prime Minister was saying to Bloomberg today.
Well, it could bring pressure off currency, but I like to look a bit deeper than that. I think that if there are minimum wage manufacturing jobs that can come back to Canada as a result of this, in addition to maybe weakening the currency, I think this is a benefit. I think it might be wishful thinking on the behalf of our government that this move will weaken our currency in the short term, because I still feel that the resources will continue to drive the Canadian dollar higher.
Well, briefly before we go, what are you telling your clients these days? Are you telling them you're bullish, or are you telling them you're bearish, or are you telling them you're neutral?
I'm telling my clients that I'm slightly bearish on the overall market, but I'm bullish on certain areas to make good money. So if we structure their portfolios in a way that's defensive but still opportunistic, I think clients can be happy. But as an index play, I would be leery of the broad basket for the next 12 months.
So we'll hear about a few of those specifics when we get to your top picks a bit later in the program. We'll be right back with more of Market Call after this. Please give us a ring. We're talking about North American large caps with Stephen Conville of Macquarie Private Wealth. Please give us a ring. Okay, we're back on Market Call. Today we're talking about North American large caps. Our guest is Stephen Conville of Macquarie Private Wealth. Let's go to our first caller today, who is in Toronto. Dave is on the line. Hi, Dave.
Hello.
Hi, go ahead.
Yeah, I got a question for Wynn Resorts. I'd like to know, where did you get to see the stock a year from now?
Wynn Resorts. We got Wyndham Worldwide up. Are we talking about Wynn Resorts or Wyndham Worldwide? Wynn Resorts.
Okay, well, Wynn Resorts, and if we're talking about the principal Steve Wynn out in Las Vegas, I guess the gambling mogul and entertainment empire. In terms of a stock, I would probably see if there's a possibility to find a secured issue of high yield debt. And the reason why I say this is that this is definitely an economically sensitive stock. And yes, he's got the new resort in terms of Encore opened up. But from the lows, I think the stock has rallied quite significantly.
Up 51% year to date and about 150% over the past year. So if you're holding it, what do you do with numbers like that?
I would start to pare back. Not that Wynn is not a well-run company. It's just that I'm not certain that the traveling public can continue to sustain in the current economic situation, or not necessarily sustain, but continue to grow. That stock performance lets me know that there's been huge growth, and I'm not necessarily certain that he'll be able to replicate those numbers. So I would recommend paring back if you've made 50, 75, 150%, and if you've bought it just recently, I would be careful.
Have you had any position in it?
No. I more would look in a high-yield bond space for that type of stock where I could have something secured against an asset.
Okay. Let's go to Kenny in Vancouver now. Hi, Kenny.
Love your show, Howard.
Thanks.
I've got to add some technology to my portfolio, and I was wondering if I could get your guest feedback on Hewlett-Packard going forward. Thank you, and I'll hang up, listen to the answer.
Hewlett-Packard, we don't often get calls about that one, and it's a huge company.
Yes. The stock, for a large company has had a terrific run, from 35 up to maybe 50 something, and I look at it and I say, I think that the bulk of the huge tech spending has taken place for the next little while. And I'm thinking that this might be a good long-term hold, like a 3 to 5 year hold if you like the technology space and you're not looking for one of those high volatility NASDAQ plays.
But you mean buying it now at this price and putting it away?
Buying it now at this price and putting it away is kind of, I would say, iffy. I would, it's not a bad company, and if you're looking 3 to 5 years out, you probably wouldn't get hurt here, but I would look to buy it at a lower price.
How much lower would you be comfortable making a purchase?
To me, in the 38 range, I think that would be a great purchase for a long-term buy.
But no position at the moment?
No position at the moment.
Okay, let's throw an email at you here from Marcy on TD Bank. I just bought TD Bank today. What's your forecast for this stock? Did I buy too high?
Well, maybe she'll make a fantastic portfolio manager one day, because those are the questions we ask ourselves every day. Oh, did I buy too high? But you're definitely at the peak price in my estimation for this current market rally. And Ed Clark and his management team at TD have done a fantastic job at mitigating the risk and coming through some of the worst financial situations in the last 100 years. They've shown a tremendous resiliency to manage the credit issues in the United States, and they have made fantastic acquisitions that should bear long-term fruit. However,
are you sure of that? I mean, it takes a long time to really know whether acquisitions pay off, because they paid a lot of money for not these recent ones. They got low prices on those, but the Commerce acquisition a few years ago was expensive.
Yes, Ed Clark, I would say, has a propensity for delivering shareholder return. And I'm confident that the acquisitions that he made. He might get a little bit of a bloody nose here and there, but long-term, TD Bank will be able to deliver the shareholder returns. That being said, at this price, I'm hoping that this was not a single security purchase, and that for this viewer, and it was part of a diversified approach.
Do you have a piece of TD?
Yes, I do.
Okay, we're going to take a short break. When we come back, more of your questions on North American large caps for Stephen Conville of Macquarie. We'll be right back. Okay, we are back on Market Call today. We're talking about North American large caps. Our guest is Stephen Conville of Macquarie Private Wealth. Give us a ring. Let's go to our next caller, though. We have Nancy on the line in Curtis, Ontario. Hi, Nancy.
Hey, thanks for taking my call.
Welcome.
My question is about Talisman. This stock seems like keep making higher lows in the recent months. But the higher seems like the 200 days averaging become a resistance. So my question is, do you think the stock will make a newer highs, like over $19? If yes, when do you think it will happen? Thanks.
Okay, so that's one of those oxymorons. I love the higher lows. But, I mean, here's a stock that, I think the investing public has been really waiting to deliver for a long time.
I.e. frustrated with.
Yes. Prices, when the price of oil was really, really high, it never quite delivered. When the price comes off, it seems to struggle. I think now that Talisman seems to have some of the moral issues behind it, and that the management structure seems to have straightened itself out, I think that this might not be a bad entry point for someone looking to get into the resource sector.
It doesn't sound like a ringing endorsement, though. Not a bad entry point. Like, do you own it? Would you buy it here?
I do not own it. I had owned it in previous occasions, and I think I made about maybe $1.80 a share, and got maybe, for a patient guy, impatient, and elected to go in a different direction. I don't know why the preoccupation with $19. I'm not certain if that was her purchase price, but at $17 a share 5 years out, I don't think it would be unreasonable to look for 24, 25, 26. So, I can't tell you when the stock that's $17.80 is going to go to $19, but if that's what you're looking for, I don't think Talisman will have too much difficulty getting there in the next 6 months.
Okay, let's go to the next one. This is an email. It's from Ken on Verizon. What do you think of Verizon Communications? Do you like it? Do you own it?
I do not own much in the way of telecom stocks right now. The only position I'm currently holding is BCE. I know that there is a school of thought that these stocks have been so beaten for so long that now is a good time to get in. I think across the board there might be better ways to play the technology space, like people more into handsets, people more into the actual technology that people are getting excited about.
Rather than the carriers themselves?
Rather than the carriers themselves.
So it got a 6.5% yield right now. Is that not enticing to you?
The 6.5% yield is enticing. Where I'm a little concerned is if it starts to behave like Pfizer, where it's
value trap.
Yeah, you're just stuck in a trap. I'm not certain The telecom sector long term has the deliverables. I'm concerned about internet erosion of their revenue stream. But that being the case, it does have a great dividend. It is one of the biggest players. So if you are attached to telecom and you don't mind small, modest incremental growth, I'm not disgusted by the stock. It's pretty good.
Not disgusted by it. You don't have a piece of it, though, it doesn't
No,
sound
I
like.
don't.
All right, let's go to Renee in Oakville. Hi, Renee.
Good afternoon, gentlemen.
Hi.
I have a question about Crescent Point, and there are two things that are holding me back up till now. First, they are trading at their almost 52-week high, plus they will have to convert because they're an income trust, but they pay a pretty good dividend every month. So I'd like your honest opinion, what you think, if I should buy now or not. Thank you, and I will hang up and listen to you. Thank you.
Crescent Point.
Well, I like Crescent Point Energy. I think that the management of the company is very sound. The analysis that I've been able to do, in addition to the research that I have looked at, has demonstrated to me that the dividend in this company is safe. So it's not going to be a situation where the company has to to cut to sustain its existence.
Do you own the stock?
I own it. It is a purchase that I have made recently, and I personally think that in the oil space that it's not a bad play at all.
All right, we're going to take one more break. When we come back, top picks from Stephen Conville of Macquarie Private Wealth. Please stay with us. We'll be right back with more Market Call after this.